was you're really looking at a longer-term bull market, even if there is a short-term pullback or a market correction. As you said, you look for 50% as a correction at all. You're looking at something smaller than that because of other factors.
That's right. I mean, we could have 5–10% dips in the market, but like I said, it's very rare to get a 20–30% move down in the absence of recession. In fact, it's almost statistically anomalous. I think something like the last 100 years, you've only had 2 or 3 20% drops that were outside of a recession. So because we don't see a recession in the next 6 to 12 months, we think potential 5–10% dips, whether it's some type of announcement related to geopolitics, some type of announcement or disappointment on tax policy, any of these things could cause a 5 or 10% dip. But really a more broad corrective recession would be problematic for a 20 or 30% dip. And we don't see that. We think a lot of investors are looking at a 15 or 20-year history of some really weak secular trends in terms of the demographic picture, in terms of the boom-bust cycle we had in commodities in China, and they're looking backwards. They're not realizing that the millennial generation will be actually bigger than the baby boomer generation and will actually be reaching its peak spending years in the next 5 to 10 years. So some of the people who are very dire on the world, dire on the economy based on trends of the last 5 to 10 years, they may not be rewarded by continuing to have that bias. The other things we think about in terms of long-term trends that might be improving, I know a lot of negative news circles around Washington today, but frankly, we could see regulatory pressures ease for a lot of the economy. We talked a lot today about large corporations in the S&P 500, but in many regards, small businesses are really the engine of U.S. economic growth. And what have small businesses been talking about the last 6 or 7 years? They've been talking about high regulation, high healthcare costs, uncertainty, regulatory burden, and we think a lot of those pressures might be easing finally at the small business level. How bad has it been? Well, small businesses have been down. Small business formation is down 30% over the last 6 years. So to the extent we see regulatory burdens ease, to the extent we see millennials spending and become a more widely perceived contributor to the economy instead of a detractor, we think that some of these trends might lighten up or might cause relief for some investor perceptions.